All right, so today we're going deep, really deep.
Deep dive time.
Yeah, into Kirin Group's 2024 integrated report.
Lots to unpack there.
Oh, yeah, this is one of those reports where, you could spend a week on it and still be finding stuff.
Absolutely, it's dense.
But we're going to pull out the good stuff, right? The
Mhm.
insights that really tell us what's going on with this global company.
Yeah, think of it as like, I don't know, an executive summary on steroids or something.
Exactly. We'll do the digging so you don't have to. So, where should we even begin with this thing? I mean, Kirin does a lot, right?
Well, the report breaks down their business into three main segments. You've got food and beverages, pharmaceuticals, and then this whole health science category, which seems to be pretty important to them going forward.
Right. And I think it's interesting how those three segments are really at different stages. Like food and beverages, especially drinks, that's their bread and butter right now.
Yeah, the cash cow.
But they're already talking about how they're seeing some like longer term trends that
Yeah.
could put pressure on that part of the business.
Yeah, they're talking about these like demographic shifts and changing consumer values.
Right. So like people are maybe drinking less or different kinds of drinks.
Exactly. Aging populations, health consciousness, all that kind of stuff.
So they're sort of getting ahead of that curve by investing in these other areas like pharmaceuticals, which has been around for a while, but also this big push into health science, right?
Totally. And health science is really where they see the huge growth potential in the coming years. It's almost like they're acknowledging that, the traditional beverage market has its limits.
Makes sense. And that whole Blackmore's acquisition last year, that was a pretty clear signal, wasn't it?
Oh, yeah. Buying that Australian company was a major move to boost that health science part of the business. Plus, it gives them more of a global footprint, especially in Asia Pacific, where the health and wellness market is booming.
Yeah, it seemed like they were really keen on getting Blackmore's integrated quickly, too. The report talked about how they got their cash management system up and running on their global platform pretty fast.
Yeah, which makes sense. They're aiming for what they call an optimal business portfolio, which basically means making sure all the pieces are working together and that they're allocating resources efficiently.
And they even put some numbers on that, didn't they?
Right? They're shooting for an ROIC, return on invested capital, of at least 10%,
10% or more, yeah.
and then also an ROE, return on equity, of around 15%. So those are like the guiding lights for their investment decisions and how they measure their success.
And it's not just about the financials, right? They talked a lot about human capital management, which basically means investing in their people.
Right, and developing those specialized skills they need, especially in areas like digital transformation.
DX, yeah. Everybody's talking about that these days.
But what's interesting is they really emphasize how their management approach this whole creating shared value thing.
CSV.
Yeah, CSV, how that helps them attract talent. Like people, especially in the tech world, are more attracted to companies that have a purpose beyond just making money, you know?
Yeah, so CSV isn't just a buzzword for them, it's baked into their strategy.
Right. It's like their core guiding principle. They even have this long-term vision, this KV 2027 thing, which basically says they want to be a global leader in CSV.
So what does that actually look like in practice? Like how does this CSV idea play out in each of those different business segments?
Well, let's start with the non-alcoholic beverages because that's their most established area.
Okay, so like Kirin Beverage and Coca-Cola Beverages Northeast.
Right, those are the big ones. And there, the focus is mostly on increasing profitability in a market that's not really growing that much anymore. So they're doing things like revising prices, using digital tech to become more efficient, and just optimizing the way they're organized.
Basically trying to get more out of what they've already got.
Yeah, exactly.
So what about pharmaceuticals? That's got to be a completely different ballgame, right?
Oh yeah, pharmaceutical is all about growth. Their strategy there is to keep growing sales of those key global products they have, like Crysvita. And of course, they're investing heavily in R&D to develop new drugs.
Yeah, they bought that company Orchard Therapeutics earlier this year, right?
Yeah, in January 2024. That was a big move to get into this whole hematopoietic stem cell gene therapy field.
Sounds pretty cutting edge.
It is, and it's potentially very lucrative, so they're definitely taking some risks there.
So lots of investment and potentially big rewards down the line. And then there's health science, the new kid on the block.
Yeah, the rising star, potentially. And here, they're seeing good progress with that LC plasma technology, which they're putting in all kinds of things. Drinks, yogurt, supplements,
Immune health is a big thing these days.
huge. And they're definitely tapping into that. And then, of course, there's Blackmore's. They're still in the process of integrating that acquisition, but they're expecting big things from it. They want to make the whole health science business profitable as soon as possible.
Yeah, which makes sense. They need to show that this whole diversification strategy is actually working.
Absolutely. They're also looking at how they can leverage their existing strengths, like their R&D capabilities,
Hmm.
their quality control processes, their marketing expertise, and apply those across all three segments.
Right, so finding those synergies between businesses that are actually quite different.
Exactly. So it's a bit of a balancing act, but if they can pull it off, it could be really powerful. Now, to get a better picture of how these segments actually contribute to the bottom line, let's dive into some of the numbers from the report. As of December 31st, 2023, food and beverages were still the revenue leader.
No surprise there.
Nope. Alcoholic beverages brought in a massive, 545.1 billion yen.
Wow, that's serious money.
And then non-alcoholic beverages added another 516.2 billion.
Okay, so those two alone are a huge chunk of their business.
Oh yeah, over 70% of their total revenue.
And then pharmaceutical came in at 442.2 billion yen, and health science was still relatively small at 103.4 billion.
Right, but remember, they're expecting health science to grow rapidly. Now, when you look at normalized operating profit, it paints a slightly different picture. Alcoholic beverages brought in 119.9 billion yen, non-alcoholic beverages 52.4 billion, and pharmaceuticals 96 billion. However, health science actually reported a loss of 12.5 billion yen, which just shows that they're still heavily investing in building that segment.
Yeah, makes sense. They've got to spend money to make money, especially in a new area like that.
For sure. And overall, the group's total normalized operating profit was 201.5 billion yen on total revenue of 134.4 billion. It's worth noting that they recently changed how they report their segments to better reflect their strategic priorities. So these numbers are based on that new structure.
Okay, good to know. So all those numbers are interesting, but what about the metrics that Kirin really focuses on to track its performance?
So they're big on two key performance indicators: return on invested capital, or ROIC, and normalized earnings per share, or normalized EPS.
Okay, so ROIC, that's basically how efficiently they're using their capital, right?
Exactly. In fiscal year 2023, they achieved an ROIC of 8%. Now, that's above their weighted average cost of capital, which was 6%.
So they're creating value, which is good.
Yeah, but they're aiming for an ROIC of more than 10%, so they've still got some work to do there.
And what about normalized EPS?
That came in at 177 yen per share for 2023. And that's a number they're really focused on because it directly impacts shareholder value.
So we've talked about their ROIC target, but how are they actually planning to boost that number?
They've got a few strategies up their sleeve. First, they're working on reducing working capital, which basically means managing inventory and payment terms more efficiently. Second, they're continuing to sell off some of their cross-shareholdings, which frees up cash.
And they're pretty picky about which ones they sell, right?
Yeah, they've got a whole process for evaluating those holdings and making sure they align with shareholder interests and contribute to sustainable growth.
Smart. So what else are they doing to improve ROIC?
Well, on the profitability side, they're focusing on improving the return on their marketing investments, reducing logistics costs, and strategically raising prices where possible.
So squeezing more profit out of each yen they invest.
Exactly. And they're also taking a hard look at their balance sheet. They've set a goal to reduce their total assets by over 100 billion yen during this current medium-term business plan period, which runs from 2022 to 2024.
Ambitious. How are they planning to do that?
One key initiative is expanding their global cash management system, or GCMS. That's already helped them reduce their cash balance by about 60 billion yen over the past 2 years.
And they were quick to get that system implemented at Black Horse too, right?
Yeah, they're really committed to it. It's all about centralizing and streamlining their cash management to free up capital.
So GCMS is one piece of the puzzle. What about their day-to-day operations? They mentioned something about the cash conversion cycle needing improvement.
Right, the CCC. They've already seen some improvements there, thanks to implementing new SAP systems, which are helping them manage their working capital more efficiently.
So they're automating and streamlining processes.
Exactly. But they're not stopping there. They want to further reduce the CCC through things like process optimization, using digital transformation tools, and improving the accuracy of their supply and demand forecasting. Basically, they want to minimize the time it takes to convert inventory into cash.
Yeah, that makes sense. The faster they can do that, the more capital they have available to reinvest in the business.
Exactly. Now, shifting gears a bit, Let's talk about how Kirin plans to create value for its shareholders.
Okay, dividends are always a big part of that, right?
Absolutely. Kirin makes it very clear that returning profits to shareholders through dividends is a top priority. In 2023, they paid out 71 yen per share, which is a 2 yen increase from the previous year. And they're committed to steady, continuous dividend growth.
So reliable income for investors. What about share buybacks? Are they on the table?
They're definitely considering them. They see buybacks as another tool to support their normalized EPS and enhance shareholder returns.
So they're striking a balance between paying dividends and investing in future growth.
Exactly. And ultimately, it all comes back to improving that ROIC. They're not just focusing on profit growth, they're also actively managing their balance sheet to make their capital work harder, which benefits shareholders in the long run.
Okay, so we've covered a lot of ground here. If you had to sum up, where do you see Kieran's business headed in the next few years?
Well, the big picture is that they're transforming their portfolio to focus more on health-related businesses. They're strengthening their existing food and beverages and pharmaceutical segments, but the real growth engine is going to be health science. Their success will depend on how well they can scale that up, integrate acquisitions like Blackmore's, and continue expanding their global reach in pharmaceuticals.
Sounds like they've got a lot on their plate.
They do, and it's going to be crucial for them to be agile and adaptable, especially in the face of all the changes happening in the world right now.
And they're really emphasizing the importance of digital transformation, right?
Oh yeah, DX is a huge part of their strategy. They're investing in initiatives like the Kirin DX Dojo to upskill their workforce in digital technologies. They're even working with SoftBank to implement AI-powered vending machines.
Vendi, I think they called it.
Yeah, Vendi. It's all about using technology to increase efficiency and potentially drive sales.
So, beyond the financials, are there any other indicators they're using to track their progress?
Yeah, they're also monitoring a bunch of non-financial key performance indicators, or KPIs,
Yeah.
things like their environmental impact, their contributions to health and well-being, employee engagement, diversity, all that good stuff. They've got specific targets for all those areas.
It's all part of that creating shared value philosophy.
Yeah, exactly. They want to show that they're not just focused on profits, they're also committed to making a positive impact on society.
And they're backing that up with concrete actions across all their businesses, like sourcing sustainable barley for their craft beers, developing new drugs to address unmet medical needs, promoting immune health with their LC plasma products, and addressing sleep issues through Blackmore's.
Yeah, they're really trying to walk the walk, not just talk the talk.
And sustainability is a big part of that too, right?
Huge. They've got a whole range of sustainability initiatives in place, from using renewable energy and conserving water to adopting sustainable packaging and promoting regenerative agriculture. It's clear that sustainability is woven into their DNA.
So the big goal is to become a global leader in CSV. How are they positioning themselves to achieve that?
Well, they're leveraging their diverse business portfolio, their expertise in fermentation and biotechnology, and their commitment to innovation. They're basically betting that by focusing on addressing societal needs through their businesses, they can achieve both profitability and make a real difference in the world.
It's a bold vision, and it'll be interesting to see how it plays out.
Definitely. They're navigating some pretty complex challenges, but they seem to be approaching it in a thoughtful and strategic way.
Well, this has been a fascinating deep dive into Kirin Group's 2024 integrated report.
Lots to digest.
Yeah, we've covered a lot. But I think the key takeaway is that this is a company in transition. They're shifting their focus towards health and wellness, they're committed to financial discipline, and they're putting CSV at the heart of everything they do.
Right, it's a pretty unique approach, especially for a company with such a diverse range of businesses.
And that brings us to our final thought for you, dear listener. Think about a company like Kirin, with all its different moving parts, trying to balance the demands of mature markets with the growth potential of newer sectors, all while trying to be a force for good in the world. It's a tricky balancing act, and it raises some interesting questions. How do you manage such a complex portfolio while staying true to your values? What are the trade-offs, and how do you make those tough decisions? And ultimately, can a company like Kirin really achieve both profitability and purpose? It's something to ponder, for sure. Thanks for joining us on the Deep Dive.
See you next time.